Today's topic is one that can be hard to think about, but is crucial for anyone managing a practice: embezzlement. We're calling today's episode Meet the Four Embezzlers Lurking in Plain Sight, a guide for savvy physicians. Why focus on this? Well, physician practices have unique vulnerabilities that make them especially appealing targets for embezzlers, and the impact of financial theft goes far beyond just the dollars lost. Welcome to Medical Money Matters, the podcast where you can find experts, answers, and resources so that you can achieve mastery over the financial and business aspects of your practice. Hello, everyone. I'm your host, Jill Arena. I began my career in accounting and finance, and I have more than 30 years of experience running medical groups. I own and operate a national healthcare consulting and revenue cycle company, and I am the author of Physician Heal Life Financial Self. In 2020, I co-founded the Physician Leadership Project, and my passion is to increase financial and business literacy for physicians. Episode 101. Meet the Four Embezzlers Lurking in Plain Sight, a guide for savvy physicians. Welcome back to Medical Money Matters, where we dive into the financial side of running a medical practice. Today's topic is one that can be hard to think about, but is crucial for anyone managing a practice: embezzlement. We're calling today's episode Meet the Four Embezzlers Lurking in Plain Sight, a guide for savvy physicians. Why focus on this? Well, physician practices have unique vulnerabilities that make them especially appealing targets for embezzlers, and the impact of financial theft goes far beyond just the dollars lost. Imagine this: a small family medicine practice, tight-knit team, trusted office manager who's been with the clinic for years. But behind the scenes, small amounts of money are disappearing month by month. Sometimes it's cash payments that never make it to the deposit, or maybe the credit card bills include strange charges that no one noticed, until it's too late. By the time the theft is discovered, thousands or hundreds of thousands of dollars are gone. Patient trust is damaged, and morale among staff hits rock bottom. For more than 82% of practices, unfortunately, this story is not hypothetical. So, why are physician practices so vulnerable to embezzlement? First, it comes down to business training, or more accurately, the lack of it. As we said in episode 1, physicians spend years mastering medical knowledge and clinical skills, yet there's almost no formal business education in medical training. Most physicians are focused on patient care, and rightfully so. That's what you're trained to do and what you do best. But the reality is that a medical practice, whether a solo office or a large group, is also a business. And without business management skills, the complex financial side of things can feel overwhelming. So many physicians hand over that responsibility to someone else, often a single office manager or bookkeeper. Another factor is internal controls, or lack thereof. In big corporations, there are multiple layers of checks and balances, finance teams, auditors, compliance departments. But for small or even mid-sized practices, those layers of control are often replaced by trust and familiarity. Doctors rely on trusted employees, and understandably so. Many of these staff members are like family. But this reliance can become a vulnerability if that trust isn't backed up with the proper safeguards. Often, when one person is responsible for too many financial duties, such as handling billing, deposits, and payments, it creates a single point of access, and with it, an opportunity, a single point of failure that can lead to embezzlement. Then there's another unique challenge. Physician practices handle a lot of cash and high-dollar transactions, which creates even more opportunity for those looking to take advantage. Add to this the daily demands on physicians' time and attention, and it's easy to see how small, unnoticed irregularities can slip through the cracks. You're focused on patients, not accounting ledgers. And that's exactly what embezzlers count on. They know that busy practices are often understaffed on the financial side and that monitoring every single transaction isn't always feasible. Let's dive into the kinds of people who commit embezzlement in these settings. Our first type is the opportunist. This is someone who may not start off intending to embezzle. Maybe they see a one-time opportunity, cash left unsupervised, a reimbursement request that no one double checks. In their mind, it starts as a small, maybe even a, quote, justifiable amount, something they think no one will notice. They're not typically systematic about it, but if they're not caught, they can get more comfortable over time, taking more and more until it snowballs. This embezzler often takes advantage of minor lapses in oversight to pocket cash payments from patients. They may skim by underreporting the total cash received each day, pocketing the difference. Because the amounts are small, they think it will go unnoticed, and in the absence of regular cash reconciliations, it often does. Next, we have the long-term insider. This person is often a trusted long-time employee, maybe even a close friend or family member of the physician. These are people you'd never think to question. They might start off small, covering for personal expenses here and there, but over time they get deeper into the deception. This type of embezzler is usually skilled at concealing their tracks. They might manipulate records, falsify financial statements, or create fake accounts to move money undetected. Because they know the practice so well, they know exactly where the weak spots are, and they can often keep the theft hidden for years. As an example, a trusted long-standing employee could set up fake vendors in the accounting system, invoicing the practice for non-existent services or products. Since they manage the books, they're able to approve and conceal these payments for months or even years, sometimes funneling thousands of dollars or hundreds of thousands of dollars into personal accounts before anyone catches on. Our third type is the external manipulator. This is someone who doesn't work in the practice but has financial access, maybe a contractor, an outsourced accountant, or a vendor. Practices might turn to these external providers to handle accounting or billing to save time or money, but without proper oversight, these third parties can become a risk. This type of embezzler might submit inflated invoices, add non-existent ghost employees to payroll, or charge for services that were never rendered. And because they're less directly involved in the day-to-day workings of the practice, their schemes can be especially tough to detect. In many cases, this embezzler simply submits inflated invoices or charges for services that were never rendered. By keeping the charges slightly above expected rates but within plausible limits, they can fly under the radar, padding each invoice just enough to go unnoticed until a full audit reveals the discrepancy. Lastly, we have the desperate employee. This is someone motivated by personal financial troubles rather than a long-term plan. They might have a sudden financial need, debt, medical bills, family emergencies, and they turn to the practice's funds in a moment of desperation. Their schemes tend to be short-term, but can still inflict serious financial damage. Maybe they inflate their hours, claim false reimbursements, or help themselves to petty cash. And while these cases may be easier to uncover, the financial hit can be significant, especially if they take advantage of a time when no one's watching too closely. Facing urgent personal financial issues, a desperate employee may falsify payroll entries, inflating their own hours, or adding unauthorized overtime. They often do this repeatedly over a short period, hoping to cover immediate needs, but the added payroll costs can quickly become a noticeable financial strain on the practice. Each of these types is different, but they all rely on the same thing: weak financial oversight and misplaced trust. And the consequences? They go far beyond money. When a practice is hit by embezzlement, it's not just the finances that suffer. There's the operational disruption. Suddenly you're trying to figure out what happened, combing through records, dealing with auditors or investigators, all of which takes time away from patient care. Then there's the impact on staff morale. Imagine discovering that a long-trusted employee was stealing from the practice. It creates an atmosphere of mistrust, especially for the remaining staff who now might feel scrutinized or worried about their own job security. And, of course, there's reputational damage. News of financial mismanagement can harm patient trust, making people wonder if the practice is well run or if they might face billing issues themselves. It's a complex and far-reaching problem. For many physicians, the biggest shock isn't even the money lost, but the sense of betrayal and the time it takes to recover. When embezzlement happens, it often leaves a lasting mark on the practice and the people in it. But the good news is that there are some relatively simple steps physicians can take to prevent these situations. You don't need an MBA to implement these safeguards, just a few smart practices that can go a long way in protecting your financial health and maintaining a trusted environment. One of the most effective steps to implement basic internal controls. These don't need to be overly complex or expensive. The key is consistency. For example, consider requiring dual sign-offs for all significant financial transactions. If two people are required to approve large payments or sign off on invoices, it becomes much harder for any single person to divert funds undetected. Another simple control is reconciling cash deposits and payments regularly, ideally every week or every month. This step helps ensure that no payments or cash deposits are slipping through the cracks. Next, set up a schedule for regular spot audits and financial reviews. Many physicians rely on an annual auditor review from their accountant, but in reality, waiting a year may be too long. By that time, an embezzler could have siphoned off a significant amount. Monthly or quarterly internal reviews of financial statements, cash flow, and payroll reports can help catch discrepancies early before they become overwhelming. Many financial discrepancies, especially in the early stages of embezzlement, are relatively small and easy to miss. Things like unusual expense patterns or small discrepancies in petty cash. But with regular reviews, you're more likely to notice when something doesn't add up. It's also helpful to divide financial responsibilities among different people. In many practices, especially smaller ones, one person handles all aspects of billing, deposits, and expenses. This makes it easy for embezzlers to cover their tracks since they're the only ones with access. Instead, consider dividing duties so that, for instance, one person handles billing, while another oversees payroll, and yet another manages accounts payable. By separating these functions, you create a natural system of checks and balances that reduces the chance of embezzlement. This step also makes it easier to spot irregularities because no single individual has complete control. And in some cases, with small practices, it's best to outsource one or more of these duties. Another safeguard is vetting vendors and regularly reviewing invoices. Fictitious vendor schemes are common in medical practices where external manipulators may bill the practice for services never rendered. To prevent this, take the time to validate each new vendor that is added to your system. Ensure invoices match actual inventory and services provided, and periodically cross-check vendors against your patient and supply records. It might feel tedious, but ensuring the legitimacy of vendors and invoices is one of the best ways to protect your practice from false billing schemes. A confidential whistleblower policy is another valuable line of defense. Often, staff members may notice when something feels off, whether it's unusual spending or irregular transactions, but they may be reluctant to speak up if there isn't a safe, anonymous way to report concerns. A simple whistleblower policy can give employees the confidence to report suspicious activity without fearing retaliation. Creating this kind of reporting system helps you catch potential problems early and reinforces a culture of accountability. Finally, consider providing basic financial training for key staff and even for yourself. You don't need to become an accounting expert, but learning to spot common red flags can be invaluable. If you have a better understanding of typical embezzlement patterns, you're more likely to notice when things aren't quite right. Some common signs to look for include sudden changes in an employee's lifestyle, reluctance to take time off, or patterns of unexplained expenses. Workshops or short online courses focused on financial literacy and fraud detection can equip you and your staff with the skills needed to recognize warning signs early. So, to recap, establish straightforward internal controls, schedule regular audits or reviews, separate financial duties, vet your vendors, set up a whistleblower policy, and consider basic financial training. These steps aren't just about preventing theft, they also help create a culture of transparency and accountability that benefits everyone in the practice. Not only will these measures protect your finances, but they'll also reinforce the trust and sense of security that your team and your patients need. Protecting your practice from embezzlement may sound daunting, but the truth is that small, practical steps make a big difference. No one likes to think of their practice as a target, but embezzlement is a reality that every medical practice should be prepared for. When you implement these safeguards, you're not just protecting your bottom line, you're also supporting a healthier, more secure environment for your team and patients alike. And if our team at Healthy Practices can be of help in setting those up, please reach out. Until next time, I'm Jill Arena, and this has been Medical Money Matters. We hope this episode gave you some useful strategies and insights to keep your practice safe and thriving. Remember, protecting your practice doesn't have to be complicated. It just takes awareness, a few smart practices, and a commitment to vigilance. Stay tuned for more episodes where we dive into the essential financial topics every healthcare professional should know. Until next time, stay informed, stay secure, and stay focused on what matters most, caring for your patients. You can find more information online at medicalmoneymatterspodcast.com, and you can sign up to be notified when enrollment opens for the Medical Money Matters e-learning program for a mini MBA physician style, which will carry CME credits and will be released in upcoming months. In that, we'll do an even deeper dive so you can understand dynamic budgeting strategies, cash flow forecasting, and other more esoteric financial concepts. We've included those links in the show notes. As I like to close out these podcasts, congratulations on taking the next step in your professional development and for making the commitment to learn about the financial and business aspects of your practice. I look forward to being on this journey with you and send you my heartfelt gratitude for all that you do for your patients all day, every day.